You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today's Friday, April 12th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Friday. First thing to know is JP Morgan kicks off Q1 reporting season. Although some companies have already released numbers, JP Morgan will mark the unofficial start of the first quarter reporting season on Friday at around 7 a.m. Eastern. The Dow component and largest bank by assets is expected to earn $2.36 a share in the quarter on revenue of $28.5 billion. Investors are watching to see whether its earnings miss in the financial quarter of 2018 was a blip or the beginning of a trend. JPM's report, to be followed by Wells Fargo's and PNC financials later in the day, could set the tone for the reporting season. Overall, this earnings season is expected to be a disappointment. FactSet expects earnings for companies in the S&P 500 to decline 4.2%, which would be the first year-over-year decline since the quarter of 2016. The second thing to know today is stocks are upbeat while waiting for big bank earnings. Despite a relatively flat close in the prior session, U.S. futures registered modest gains, suggesting upbeat expectations for bank earnings. Elsewhere, European stock markets were more cautious. The Pan-European Stocks 600 was in negative territory, though little changed as the region's trading session neared midday. Earlier, Asian stocks saw a mixed trade on Friday, with particular attention paid to Chinese stocks. Although the Shanghai Composite ended the session flat, it registered its worst week of losses so far this year. The third thing to know today is U.S. consumer sentiment is expected to weaken. Corporate results aside, the health of the U.S. consumer will dominate Friday's economic calendar. The University of Michigan will release its preliminary measure of April consumer confidence at 10 a.m. Eastern Time. The Michigan Consumer Sentiment Index is expected to edge down down to 98.1, following 2 straight months of gains above expectations, according to economists' forecast compiled by investing.com. The consumer expectations component is also expected to drop slightly to 88.5. The fourth thing to know today is oil is on track for its best weekly stretch since 2016. Bulls piled back into oil Friday, pushing the rally to its best stretch in nearly 2 years, on the back of continued unrest in exporter countries in North Africa and data showing a slight year-on-year rise in Chinese imports. U.S. crude futures jumped 86 cents or 1.4% to $64.44 by 5:36 a.m. Eastern, while Brent oil traded up 72 cents or 1% to $71.55. The International Energy Agency warned Thursday that there's an extraordinarily wide divergence of view as to how long strong growth will be in 2019, sparking fears over the impact on demand for crude. West Texas Intermediate oil lost 1.6% on Thursday, but despite the blip, was on track for weekly gains of nearly 2% in what would be its longest weekly winning streak since 2016. Still ahead, Baker Hughes will release its weekly rig count data, an early indicator of future oil output in the U.S. at 1 p.m. Eastern. Last week's reading showed that energy firms increased the number of oil rigs operating in the U.S., breaking a run of 6 straight declines as higher prices encouraged more drilling activity. And the fifth thing to know today is China imports from the U.S. plunge 28%. While markets follow developments in trade talks between the world's two largest economies, China produced some mixed trade data to end the first quarter on Friday. Chinese exports rebounded to a 5-month high in March, beating expectations and providing some relief over the outlook for an economic recovery. At the same time, however, imports plunged more than expected, falling for a 4th straight month and matching the decline seen in last December. Picking through the data, the Chinese Customs Department indicated that China's total trade with the U.S. actually slumped 11% in the first quarter, driven by a 28% plunge in imports from the U.S. During the month of March, China's imports from the U.S. fell by 21%, while Chinese exporters sent 10.6% more of their products to American consumers. Although some analysts commented that Chinese exports may have been affected by seasonality, the numbers give the impression that the current state of trade may not be coming out in favor of the U.S. Our second story today is from CNBC.com. It's a follow-up here. JP Morgan shares surge after bank posts record profit and revenue. JP Morgan Chase on Friday reported record first quarter profit and revenue that exceeded analysts' expectations as the bank benefited from higher interest rates. The company said profit rose 5% to $9.18 billion or $2.65 a share, compared with analysts' average estimates of $2.35 a share. Revenue also rose 5% to $29.9 billion, exceeding estimates by about $1.5 billion, as net interest income grew 8%, thanks to the impact of higher rates, JP Morgan said in a release. The boost was evident in the bank's huge retail lending business, where profits surged 19% to $3.96 billion. Shares rose 2.7% in pre-market trading. Our third story today is from NASDAQ.com. Amazon is gearing up to challenge FedEx and UPS. Amazon.com may want to play coy when it comes to its ambitions about becoming a full-fledged logistics company taking on UPS and FedEx, but behind the scenes it is clear the e-commerce giant is inexorably moving in that direction. The latest sign is Amazon's agreement to acquire a 40% stake in Atlas Air Worldwide and a 33% ownership position in Air Transportation Services Group, the two aircraft leasing companies through which Amazon operates its Prime Air Cargo service. The e-commerce company will also begin leasing 5 new Boeing 737s from Atlas, with the possibility of adding 15 more. And that, ladies and gentlemen, is news you can use for today, Friday, April 12th. 2019. Your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great week.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.